In this video, we are going to talk about crypto crash or opportunity, understanding the cryptocurrency market. So before starting this video, please like this video and subscribe to our channel for future updates. The cryptocurrency market has been experiencing a significant downturn in recent months. From its peak total market cap of $3 trillion in November 2022, the crypto market's worth has plunged to between $1.05 and $2 trillion by January 2023. This crypto crash, led by major cryptocurrencies like Bitcoin and Ethereum, has erased substantial amounts of value, causing ripples of concern among investors and regulators alike. This market crash is the result of a complex interplay of various factors that include economic, regulatory, and market dynamics. These factors, combined with a shift in investor attention from Bitcoin to newer, smaller cryptocurrencies, and the broader global economic uncertainties, have contributed to the current state of the crypto market crash. What is cryptocurrency? A cryptocurrency is a digital or virtual currency secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Most cryptocurrencies exist on decentralized networks using blockchain technology, a distributed ledger enforced by a disparate network of computers. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. Understanding cryptocurrency. Cryptocurrencies are digital or virtual currencies underpinned by cryptographic systems. They enable secure online payments without the use of third-party intermediaries. Crypto refers to the various encryption algorithms and cryptographic techniques that safeguard these entries, such as elliptical curve encryption, public-private key pairs, and hashing functions. Central to the appeal and functionality of Bitcoin and other cryptocurrencies is blockchain technology. As its name indicates, a blockchain is essentially a set of connected blocks of information on an online ledger. Each block contains a set of transactions that have been independently verified by each validator on a network. Every new block generated must be verified before being confirmed, making it almost impossible to forge transaction histories. The contents of the online ledger must be agreed upon by a network of individual nodes or computers that maintain the ledger. Experts say that blockchain technology can serve multiple industries, supply chains, and processes such as online voting and crowdfunding. Financial institutions such as JPMorgan Chase & Co. (JPM) are using blockchain technology to lower transaction costs by streamlining payment processing. Types of cryptocurrency. Many cryptocurrencies were created to facilitate work done on the blockchain they are built on. For example, Ethereum's Ether was designed to be used as payment for validating transactions and opening blocks. When the blockchain transitioned to proof-of-stake in September 2022, Ether, ETH, inherited an additional duty as the blockchain's staking mechanism. Ripple's XRP is designed to be used by banks to facilitate transfers between different geographies. Because there are so many cryptocurrencies on the market, it's important to understand the types of cryptocurrencies. Knowing whether the coin you're looking at has a purpose can help you decide whether it is worth investing in. A cryptocurrency with a purpose is likely to be less risky than one that doesn't have a use. Most of the time, when you hear about cryptocurrency types, you hear the coin's name. However, coin names differ from coin types. How to buy cryptocurrency. If you want to use cryptocurrency to buy products and services, you will need to go to a cryptocurrency exchange. These are businesses that allow you to buy or sell cryptocurrencies from other users at the current market price, similar to a stock. After buying the coins, you will need to transfer them to a digital wallet or use a third-party service like Coinbase to store your coins. If you only want to buy cryptocurrency as an investment, you may be able to do so through your brokerage. For example, Robinhood allows users to invest in Bitcoin and other cryptocurrencies, although you cannot withdraw them from the platform for purchases. In addition, there are several crypto ETFs that provide exposure to the crypto asset class without requiring the investors to maintain their own wallets. Is cryptocurrency legal? Fiat currencies derive their authority from the government or monetary authorities. For example, each dollar bill is backstopped by the US government, but cryptocurrencies are not backed by any public or private entities. Therefore, it has been difficult to make a case for their legal status in different financial jurisdictions throughout the world. It doesn't help matters that cryptocurrencies have primarily functioned outside most existing financial infrastructure. Why do investors choose cryptocurrency? While the concerns around cryptocurrency are many, it still holds a lot of appeal for certain investors for a number of reasons. Many are attracted to the speculative element inherent in crypto's shifting prices, which entices investors looking to profit from market value changes. Other investors like cryptocurrencies for the unique qualities they offer, such as decentralization, security, and anonymity, that traditional currencies do not provide. These perceived advantages are largely theoretical at the moment, but crypto enthusiasts believe faster and cheaper transactions, improved security and privacy, and greater financial inclusion are coming, and will bring more mainstream adoption. Factors contributing to the crash. One of the key factors contributing to the crypto market crash has been the economic measures taken by the U.S. Federal Reserve. The Fed, in a bid to combat inflation, has been aggressively hiking interest rates, with 10 consecutive rate increases over the last year. This has pushed interest rates to their highest levels since 2007, affecting the dynamics of the financial markets, including cryptocurrencies. As a result, Bitcoin's appeal as an inflation hedge has diminished, with billionaire hedge fund manager Paul Tudor Jones indicating that the game of buying Bitcoin as an inflation hedge might be over. Furthermore, data shows that U.S. consumer inflation fell to its lowest rate in 2 years following these rate hikes, further diluting the case for cryptocurrencies as inflation hedges. Regulatory scrutiny of the crypto industry has also increased significantly, contributing to the market downturn. In the U.S., there have been reports of a secret plan for a game-changing crypto crackdown, indicating a more stringent regulatory environment for cryptocurrencies. The entire regulatory apparatus in the U.S. seems to be aligning against Bitcoin and other cryptocurrencies. This has led to a situation dubbed Operation Choke Point 2.0, where politicians are unofficially forcing the crypto industry out of the banking system. Finally, market dynamics and investor behavior have also played a crucial role in the crypto market crash. There has been a noticeable shift in investor attention away from Bitcoin towards newer, smaller cryptocurrencies in recent weeks, a phenomenon that Wall Street giant Morgan Stanley interprets as a signal that the Bitcoin price top is in. How do you buy cryptocurrency? You can purchase cryptocurrency from popular crypto exchanges such as Coinbase, apps such as Cash App, or through brokers. Another popular way to invest in cryptocurrencies is through financial derivatives, such as CME's Bitcoin futures, or other instruments, such as Bitcoin trusts and ETFs. What is the point of cryptocurrency? Cryptocurrencies are a new paradigm for money. They promise to streamline existing financial architecture to make it faster and cheaper. In addition, their technology and architecture decentralize existing monetary systems and make it possible for transacting parties to exchange value and money independently of intermediary institutions such as banks. What is the most popular cryptocurrency? Bitcoin is the most popular cryptocurrency, followed by other cryptocurrencies such as Ethereum, Binance Coin, Solana, and Cardano. Industry reactions. The crypto market crash has not left traditional financial markets untouched. The S&P 500 index, a common barometer for U.S. equity markets, suffered a loss of 2.7% this year, indicating a ripple effect from the crypto market downturn. This shows that the turbulence in the crypto market is starting to impact traditional financial markets, creating a more cautious investing environment across the board. On a broader scale, the economy is also reacting to the crypto market crash in conjunction with other factors. Rising house prices and increasing wage inflation are significant considerations, especially in the face of the crypto market downturn. These factors could further push investors away from riskier assets like cryptocurrencies, adding to the downward pressure on the crypto market. So this is our today's video. If you like our video, don't forget to subscribe to our channel or hit the bell icon. We will meet again with another interesting topic. Till then, stay safe and stay happy.